Good day to my beloved doctor. I am Pavitra, daughter of Shanmugam, with matrix number S61573. The company that I chosen is FarmFresh. Here is a little background. FarmFresh Berhad is a Malaysian agriculture service. In other words, it is a vertically integrated dairy corporation that farms, manufactures, and distributes dairy and plant-based products. FarmFresh began its operations in 2009. It is a registered company under the Register of Companies Malaysia and is considered a Malaysian resident for taxation purpose. The company has a workforce of 400 employees, all of whom are registered with the Labor Department. All of the workers are also resident of Malaysia. The company has been in operation for several years, providing an agriculture service to customers across Malaysia. Next, we are going to learn how to compute tax for the company using the system. First, net profit before taxation of FarmFresh, which is 20,585,000. We need to deduct other income. Other income includes the interest income and dividend income. Dividend income for FarmFresh, which is 105,000, and interest income from deposit in CIMB Bank 25,000. After we deduct all the other income, we need to add all the non-allowable expenses made by FarmFresh. First, depreciation, which is cost of asset divided by useful life, and we get depreciation, which is 450,000. Secondly, renovation. Renovation expenses include the cost of renovation office or company. The cost incurred was 85,000. Thirdly, donation. FarmFresh contributed computers worth of 40,000 to University Malaysia Terengganu to improve the library facility. University Malaysia Terengganu is a public university. Next, general provision for trade receivable, which is cost 25,000. The last non-allowable expenses which was made is entertainment expenses. There is 50% deduction on the entertainment expenses spent for employee. After the deduction of 50%, entertainment expenses cost for 30,000. Next, we need to make double deduction when FarmFresh get its halal certification, which cost 25,000. And also advertisement made by the company and its cost for 120,000. For advertisement, it's comprised of gifts of laptops to primary schools to support e-learning during COVID-19 pandemic, gifts voucher of Aeon Big given out for staff during annual dinner, and new signature board display at highways. To calculate adjusted income from company, we need to deduct other income and double deduction and add all the non-allowable expenses from net profit before taxation. By that, we get adjusted income from company, which is 20,940,000. Then, from adjusted income, company deduct capital allowance that we have to get statutory business income. All of the 5 directors are using vehicle registered under company name. The vehicle used by all 5 directors cost 200,000 each and was purchased in 2020. Capital allowance rate for the vehicle is 20%. From the year 2020 until 2022, every year need to deduct 20% from the residual expenditure. Only for the first year need to deduct initial allowance of 20%. And for capital allowance cost 40,000. After deduct the capital allowance of 40,000, we get aggregate income, which is 20,900,000. From aggregate income, we need to deduct approved donation and corporate zakat. Farm Fresh have approved donation because University Malaysia Terengganu is a public university. If the gift of money made to the approved institution will get a fully deduction and deduct 40,000 for donation and also deduct corporate zakat cost 50,000. By deduct these two, we get chargeable income, which is 20,810,000. And finally, to get tax payable amount, we need calculate as following. For the first 600,000 will be calculated with rate of 17%. For amount exceeding chargeable income, deduct 600,000 will be times with 24%. Finally, from rate 17% and 24% will be added to get tax payable amount, which is 4,993,200. That's all from me. Thank you for listening.